Hello, I'm Richard Murphy. This is the first in a new series of videos that I'm making about taxing multi-millionaires. It's an important subject. It's something that has to be done. It's something that very few countries, including the UK, do very well at present. And I want to talk in this first video about why we need to do it better. The first thing to do is to shatter the myth that we need the money that multimillionaires can provide to us. As a matter of fact, we don't. As the COVID crisis has proved, the government can create all the money it needs to fund its spending if it wants to, simply by asking the Bank of England to create it. Now, we can do that, but what we also know is that we can't do that forever without certain problems arising. One of those problems is, of course, inflation. And inflation comes in two forms. There's domestic style inflation, that which affects our earnings from employment, and that which affects the prices that we pay for those everyday goods and services that we buy. And the second form is asset price inflation, our houses, stocks and shares, and so on. Both can be impacted by money creation. But there's something else that is impacted by money creation, and that is inequality. Inequality rises when governments create money. Now, most people think that's rather odd because, of course, a lot of government spending is designed to tackle inequality, and it certainly was during the course of the COVID crisis. People were supported to be in employment. Additional benefits were paid and have now been withdrawn. So why is it that inequality rises as a consequence of the government creating new money? Well, quite simply, somebody has to get that money that is created. That is in the nature of double entry accounting, and all money is created by what is, in effect, double entry accounting, because money is just a promise to pay. What it records in the ledgers of the bank that creates the money is a promise by a customer to pay it back the money that it has promised to pay somebody else. That is what the government does when it does QE. It promises to pay the Bank of England if the Bank of England will pay somebody else on its behalf. And eventually, all the money that is created has to go somewhere. It does not disappear unless it is taxed back out of existence, and it hasn't been. And so, where does it go? Well, the answer is it trickles up through the economy. It keeps on circulating around and around the economy until eventually it arrives in the hands of somebody who doesn't need to spend it. That person who doesn't need to spend it must, well, virtually by definition be wealthy because they haven't got to spend to balance their own needs. And when they save it, which is what happens when they don't spend it, they become wealthier. And over the course of the COVID crisis, as we have seen, people have become substantially wealthier in the UK. Now, data on wealth in the UK is a little incomplete. The official data runs out in 2018. But what we know is that between 2013 and 2018, official wealth in the UK went up by something like £5 trillion, up to something like 12 trillion. So a massive increase over that period. And what we also know is that it has increased significantly again during the course of the COVID crisis by much more than the amount of money that was paid by the government into the economy to balance its need for cash during that period. Why has it gone up by more than the amount spent? Well, we actually value wealth by the last item spent. So, if the price of houses has gone up during the COVID crisis, and it has, we know, significantly, then the consequence is that every house appears to have gone up in price as a result. So we don't have to have every house change hands for the overall value of wealth within the economy to increase. Now, the consequence is that we have a much more divided society in 2021, and as we look into 2022 and beyond, than we had even in 2019. The wealthy are wealthier. And that's a matter of importance. Now, we don't need to reclaim that money to either cancel the debt that was created because the debt was simply money, and we don't need to reclaim that money from the wealthy for the reason of funding future government spending, because that will be paid out of future taxes or future quantitative easing if that's what the government decides to do. Instead, we need to reclaim the money that the wealthy have ended up with to tackle the problems that that wealth creates in itself. And that problem is increased inequality, which undermines the cohesiveness of society, the increase in asset prices because there has been massive asset price inflation over this period, which is creating significant instability, not least by making housing even more unaffordable for the young people of the UK than it has been for some time. To reduce the risk of there being a financial crisis because shares are overvalued as a consequence of the money that has poured into stock markets during this period. So we need to redress this inequality. And what will we do if we redress it? Well, we'll make the world a more stable place. Simple as that. That's our goal. We want to reduce fear in society. And fear is created by instability, or the threat of it, or the absence of being able to make ends meet. And large quantities of the UK are not able to make ends meet. We know that a significant part of the population is on benefits. We know that many of those people have suffered, for example, because of the loss of universal credit of £20 a week. And yet at the same time, we know that vast numbers of people are significantly better off as a result of the COVID crisis. So we need to tackle that sense of injustice by tackling the wealth that exists, by taxing it more to create a better balanced society and to reduce the massive inflation in asset prices that is fueling that inequality that we face. This is why we need to tax the rich more. Leave aside the fact that the money collected could be used by the government, because that isn't the way the system works. Tax is not used to fund government spending. All government spending is created in the first instance by the government simply asking the Bank of England to make payment. Tax is collected to cancel the consequences of that money creation, and in this case we're collecting tax for two reasons. One, to tackle inflation, and two, to tackle inequality. And that's what this whole series is going to be about. How we do that effectively to create the better, stronger, more stable society that we need to ensure that the UK is in the position that it has to be to tackle the issues that it must face over the decades to come, including, not least, that of the climate crisis. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk. And we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.